Hi everyone, welcome to StunnerShare. So this video is a continuation of the simple moving average setup for positional traders. This is part 2 of this video. In this video, I would have completed the entire 13 years of back testing and also how it has performed and what are the different ways you could have kept your stop losses or trailed your stop losses. All these has been updated, and what is the risk you are involving here, and what are the possible ways you can invest in this, and what are the possible back testing methods you can do. I have shared all those in this part 2 video. So let's summarize the part 1, revise the part 1 series. Like in the past one, I've just told you guys what is the setup. So 20 moving average has to cross above the 200 moving average after a bearish trend. So we are not here telling that the bottom is formed. We are not telling here is the top, it is going to make a new high. We are just telling that there is a possible positional trade which is available based on few of the conditions. So the first condition is the candle should close above the 200 SMA and the 20 SMA, no matter whether the 200 SMA is below the 20 SMA or 20 SMA is below the 200 SMA. We just need the candle to close above the 20 SMA and 200 SMA. So once after a close is formed above the 200 SMA and 20 SMA, then what you need to do is you need to wait for the 20 SMA to cross above the 200 SMA. So when the moving average is crossing above, the 20 moving average is crossing above the 200 moving average, at that time you need to mark the recent swing high which the stock has formed. Here we are considering only Nifty, so recent swing high which has been formed at the crossing of 20 SMA and 200 SMA, you have to mark that. And once after marking that the swing high, and once after this 20 SMA has crossed above the 200 SMA, then you need to check what is the pullback, or where is the pullback happening, or whether the pullback is happening towards the 20 SMA. At least 20 SMA must touch. It should not be it has to go close near the 20 SMA and then go away. It should not be that the case. It should at least touch the 20 SMA. So here I'm mentioning at least touch the 20 SMA. So in this case, the candle can touch 20 SMA, the candle then go and touch 200 SMA, and the candle then go below the 200 SMA. So no matter where the candle goes, but the candle must touch 20 SMA. Once after touching the 20 SMA, if the marked swing high is getting broken, and that is where your entry will get triggered. Before do the entry, before to the recent swing high is getting broken, if in case the 20 SMA is again closing below the 200 SMA, then the setup is failed. Clear? So this is what I have covered in the part 1 series, and in the part 1 series I've ended how to take a trade, what is the possibility to take a trade, what are the options to take a trade. I just close the video there itself. Now in this video I'll cover the entire part of it. Kindly do watch the video completely so that you will be able to understand what is that I'm trying to say over here. And also please let me know your feedback in the comment section. Please share this video to your friends and family, so this will be beneficial to everyone. And a strict disclaimer to this video, because the analysis what I'm trying to share is past history analysis. I can be wrong in my understanding as well, so please do your own analysis on this and apply your knowledge and play with it. Please do not blame me for your profits and losses. Come, let's move on to this continuation of the part 1 series. Let's move on. I told you guys, this assume I'm going to take a trade on December. You have to go to December month contract. You have to go to options, and right now the what is expected is you will be taking at the spot price only. So 6,600 is going to be your spot price. 6,600. Okay, there is 6,500. okay, this is going to be the spot price. I'm going to buy this. 17,000 call option is over here. You have to sell one lot. Okay, if you sell one lot, that total capital you needed is 16,000 rupees. Okay, just 16,000 rupees you need. Assume 17,000 rupees you need to do this trade. And what is the break even point? If the price is closing about 16,780, then you will be in profit. Okay, if the price is closing about 16,780 or 17,000, you will be in profit. And right now the spot price is in 16,600. okay, and we are aiming for 1:1. 1:1 in the sense, say for example, this is our entry point, this is 16,600, and this is our stop loss. Say this is around 16,200. If that is the case, then we are going to we know our risk also, so we need not hold this trade until it goes till here. If in case if you see that the trade is going towards loss in 16,200 itself, say for example you have taken, this is a March, you have taken the trade on May, and when it is coming on June or July itself, this trade has hit your stop loss, you can exit. At that time your loss will be very small. Okay, but if you are holding, you have to hold at least for your 1:1. Okay, assume your 1:1 comes around 17,000 or 17,800, then you have to wait till that time. Okay, your loss or profit will hold on as like how long you are holding this trade. Now let us forget, I don't want to hold this trade till June. December. I don't want to hold this till 9 months. I want to hold till like say for example 6 months or 3 months. In the case of 3 months, you have to choose this. You have to choose June month contract. Okay, so in June month contract also it is the same. I think it is not getting updated. Okay, let me go to June month. So 17,000 you will be selling it, and 16,500 you will be buying it. Okay, same thing, and see what is your profit and what is your loss. Okay, and assume if you are not going to if the stock price is not going to hold above 16,800, then what will happen is like your stop loss will get hit, or your contract will go to minus 14,000 loss when it expires in the zone between 16,400. Okay, so you need to ensure how to take. Otherwise you feel that no, I don't want to do all these things, better I will hold a future itself. Then you have to take this future. Okay, and now let us take March itself. Take this future, add position. So your total margin you needed is this. So whenever the month end contracts is happening, you need to close that future and you have to open the next future. So that is called as rollover. Okay, you have to do either of this option, but let us see how the stock or how this particular setup has performed till 2021, and then let us decide. Okay, so we have seen one setup. Now we have to wait for bearish trend. So this is one such bearish trend has happened, but no proper clarity is there, because though the price has closed below the 200 SMA, 20 SMA, and 20 SMA across below the 200 SMA, but not much of great movement has been seen. So I'm avoiding this particular zone. Okay, so I'm avoiding this particular zone. If you guys wanted to go for and check like whether this stock has performed good or not, I'll tell you guys one thing. Okay, so the stock has closed above the 20 and 200 SMA over here, but 20 SMA did not cross above the 200 SMA. So the 20 SMA crossed above the 200 SMA when this high has formed. Okay, when this high was formed, 20 SMA crossed above the 200 SMA. But after this high has formed, after 20 SMA crossed above 200 SMA, there is no pullback towards the 20 SMA. Okay, so here only the pullback towards the 20 SMA happened. So my entry will shift over here. So if I have to, then if this particular zone is broken, then my entry will get triggered, but this entry did not get triggered. So next entry I got in July 2015. So conditions met and not triggered. Okay, now again bearish trend, bearish trend, bearish trend. Okay, here is what the crossover has happened. Now let us go over here, come again. Stock has closed above the 200 SMA and 20 SMA, and this is the recent high before the 20 SMA crossed above the 200 SMA. Okay, so 20 SMA crossed above the 200 SMA. So this is a recent high, and here after the crossover, the candles are touching 200 SMA. Okay, 20 SMA, sorry, the candles are touching the 20 SMA as well as 200 SMA. And after that, after making a high of April 2016, the stock broke out on May 2016. So here will be my entry point and my stop loss will be over here. Okay, so entry point is around 8,000 is my entry point and 7,600 is my stop loss. So 400 point stop loss. Now let us see whether 8,400 is touched. Yes, 8,400 is touched over here. So at the April 2016, condition met, triggered, and target is also met. Okay, okay. Now let us go for next scenario. This is 1:1 I'm keeping. You guys check for 1:2 also. Okay, now let me go for another scenario. So here is another crossover which has happened. 20 SMA is trading below the 200 SMA. Now let us see, the high has formed. Okay, and the crossover has happened over here. So I would consider this as the high. Okay, this as the high I would consider, and the pullback candle should touch 20 SMA and 200 SMA. Here it did not touch, so there is no entry at all. Okay, so the conditions did not met. So Jan 2017 not met. The pullback candle did not touch the 20 SMA. Now let me go again. Again I have to wait for 20 SMA and 200 SMA crossover. Okay, so here is one crossover which has happened. Okay, and after this the candle made actually closed about 20 SMA and 200 SMA over here, but the crossover happened over here. By the time the crossover happened, and the recent swing high over will be here. But if you see, the 20 SMA crossed below 200 SMA, 20 SMA crossed above 200 SMA, 20 above. So all these conditions did not satisfy, so the conditions actually got failed. Okay, so this zone we will not be able to consider any entry. Why? Because assume we have marked this and we will wait for the entry to get triggered. So 10,985 the entry I am waiting to get triggered, but 20 SMA crossed below 200 SMA, so I will be cancelling it. Again 20 SMA crossed above the 200 SMA, again 20 SMA crossed below the 200 SMA. So I would avoid all these situations. Clear? I would avoid all these situations. Clear? Now let me wait again. Okay, there is a crossover happened over here, and if you see, okay, the candle closed about 20 SMA, 200 SMA. So this is the recent high which has been formed, and after that crossover has happened over here, and after the crossover there is no pullback towards the 20 SMA. Okay, so here also conditions did not meet. So around September 2019, conditions not met. Okay, after 20 SMA crossed above the 200 SMA, the 20 SMA is not touched, so we are going to avoid this scenario. Now the corona wave, good thing, and then after this we are going to see over here. Okay, so here if you see, okay, from here the stock has rallied and closed above the 20 SMA and 200 SMA, and when the crossover has happened, here is the crossover happened. So I have to mark the recent swing high. So this is the recent swing high, and after that the candle must close or touch the 20 SMA. It has touched, and after that the entry got triggered. So August 2020, conditions met and entry got triggered. Now stop loss or target hit, let us calculate. So this is our entry point 11,340 and stop loss is 10,880. So 11,340 minus 10,880, so 460. So plus 11,340. So 11,800 should be the target. But 11,794 with just 6 points, the stop loss got the target got missed and the stop loss got hit. Okay, this is our low, right? This low is our stop loss, right? Okay, the stop loss got hit. Clear? Now if you guys see over here, then after that, if you guys wanted to take any pullback, then it's up to you, but it did not happen. So unfortunately, after that, the last scenario what we face is a stop loss scenario, and after the stop loss got hit, there is no crossover happened. That means 20 SMA did not close below the 200 SMA, and just right now the 20 SMA has closed below the 200 SMA. Now what you guys need to do, or what you guys needs to do, first of all, first condition, the candle must close above the 20 SMA and 200 SMA. So first condition is met. After that, mark the high. After that, wait for the 20 SMA to cross above the 200 SMA. Once the 20 SMA is crossed above the 200 SMA, and once you mark the high, then wait for the pullback candle or any candles touching 20 SMA after the crossover has happened. Once after that crossover happened, then whenever the high is getting broken, and that is where you have to enter, and the recent swing low will be your stop loss. Wait for 1:1 and see how it has performed. And all these years from 2009 till 2021, 12 or like 13 years, only three times entry got triggered, and four times entry got triggered, and four times, three times stop loss did not hit and target was hit, and only one stop loss got hit, and nearly 2 to 3 times the condition did not met, and nearly 3 times the entry did not trigger at all. So whenever the entry did not trigger, that tells the bearish trend is actually continuing. Whenever the entry is getting triggered, that tells our target is hitting most of the times. So this is not a single day trade. This is not a single week trade. This is not a single month trade. This can go for months. So if you are a well expert in rollover, I take a future, I just roll over. If you are well good in that, go for it. If you are good in doing call spread or bull spread, if you're very good in that, then go for doing that. If you guys are aware of these scenarios, then prefer this entry. Clear? And you guys can also explore more. How to explore more? So that will be one condition, right? Just check. Okay, now let us go to all the scenarios. Now let us go to all the scenarios where whenever we got the entry got triggered. Okay, whenever 2012 entry got triggered, right? We'll go there. 2012 August, our entry got triggered. Okay, so this will be our entry. Sorry. So this is our entry. Okay, this is our stop loss. Let me mark it over here. You like this stop loss. So assume you are going to exit only if the stock. Only if the 20 SMA is crossing below 200 SMA, assume you are going to exit the stock only at that time. So we know 5,000 will be our stop loss. Okay. Now let us wait when 20 SMA crossed below 200. 20 SMA crossed below 200 SMA over here. At this time, you have to exit the stock. Okay. At this time, you have to exit the price. So what would happen? Are you in a profit or not? So here you will be in profit, but your profit would have reduced a lot. Okay. So your profit would have reduced a lot. So only 100 points profit you have got, but your stop loss was 400, but your points what you have got is 100. So plus 100 points your profit. Okay. Now let us, what is the next condition on when it has triggered on September 2013. Okay. September 2013 is over here. Okay. The entry point is over here. Sorry guys. The entry point is over here and the stop loss is over here. So around 6,200, 6,150 is the entry point, and you have 5,450 points as stop loss. If 20 SMA crosses below 200 SMA, and that is where you are going to exit. Okay. So here is where the 20 SMA crossed below 200 SMA. So here the points is 8,300. So nearly 8,300 minus 6,150. So 2,150 points is your profit just for 450 point stop loss. Okay. Now let us go to the next one. April 2016. Okay. April 2016. Okay. April 2016. Here is the entry point. Here is the entry point and here is your stop loss. Okay. The entry point is 8,000. Stop loss is 7,600. So 400 points. So 350 points. Okay, let me keep as 400 points. So 20 SMA has to cross above the 200 SMA. So here it has crossed. So here 8,200, 8,150, and our entry point is 8,000. Okay. So here 200 points profit and 400 points stop loss, but we are in profit only. We are not in loss. Now let us go to 2020 scenario. Okay. 2020 scenario, August. Okay, so this is the 2020 scenario and our entry point is over here. Okay, our entry point is over here and our stop loss was over here. Okay, was over here. Let us consider. So 11,350, 10,900. Let's give 888. Okay, 11,350 minus 10,880. So 470 points stop loss. Okay, let's keep it as 450 points. Okay, 450 points stop loss. Now let us wait only till 20 SMA crossover below 200 SMA. Okay, and the 20 SMA crossed below the 20 SMA at 16,957. So 16,957 minus let's keep it as 11,350. So 5,600 points profit. 5,000 for 500 points stop loss. Okay. Whenever you are having a very strict SL, just I'm going to face the swing low as SL and and in that 3 times target got hit and 1 time profit, 1 time stop loss got hit. So in this 3 time average, assume that you are getting 400 points as profit. So 3 into 400, so 1,200 as profit. And in only 1 time your stop loss got hit and 400 points as stop loss. So 800 points you are getting in profit. But let us take this case. In all these cases, take average of stop loss is 500, and you are waiting for the scenario like whenever 20 SMA crosses below the 200 SMA, and that is where I will exit. But see how what is your target, what is your profit over here. Okay, 5,600 plus 200 plus 2150 plus 100. So this is your profit, 8,000 points profit you have seen. So this is what I have checked from 2009 till 2022. Now you guys go and check what has happened from 2000 to 2009, and also you guys can go and check Banknifty also, or check Dow Jones, so that you will come to know these are very rare scenarios to happen. So you guys see, in the 13 years only how many times it has happened? It has happened nearly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 times it has happened. So yearly once or 2 years once it is happening. So try, you can use that scenario also. Even if you see 2010 there is no entry, 2014 there is no entry, and 2018 there is no entry, 2021, 22 there is no entry. So these are very rare scenarios which is happening. But if it is happening, if you are going to check it very properly, then it is giving a good amount of returns. So what I would tell you guys is like, do back testing, check what all has happened, but ensure how you are going to take a trade. See, all this back testing, all these scenarios what happened in 13 years, all these I can say these are data analysis which I am telling to you guys, but execution actually matters. How you are going to execute the trade, whether you are going to hold the futures or whether you are going to hold the options. Like if you are going to hold the futures, will you be able to bear the 400 point stop loss? 400 point stop loss is going to be 30,000. So will you be able to bear that 400 point stop loss? So all these things you have to make sure whether you are able to do it or not. If you guys think, okay, this is going to be very tough for me, options also it is tough for me, and futures also it is tough for me, then go for Nifty Bs. Okay, just go and check Nifty Bs, how it has performed in all these scenarios, and you try to execute based on that. Clear? So this is what I thought of sharing this to you guys in this video. If you feel this content is good, kindly give a like and share this to your friends and family, and that would be helpful for me. And any feedback like, see, this is fake, or this cannot be possible, or whatever you wanted to share your thoughts, or just try to share your thoughts on what is a different strategy we can use so that we will not lose more of brokerage. All these things you can let me know for this particular strategy, so that will be helpful for us. Clear? So that is what I wanted to share in this video. If you feel the content is good, kindly give a like and share, and please forward this to your friends and family so that they will also be benefited. Kindly support this channel, and I'll also try to make more of data analysis videos to you guys. Okay, thanks a lot. Stay tuned for more videos.